Hello and welcome to the program. Let's get right into what happened overnight in global markets. U.S. stocks finished essentially flat across the board. The Nasdaq closed at 26180, the S&P 500 at 7674, and the Dow at 53277. Futures were also unchanged in pre-market trading. This is a market that has been climbing for several sessions and now appears to be taking a breather on lighter volume. On the individual stock level, EBIT rose more than 5.5% to just under $44. Tesla gained nearly 4.8%, MicroStrategy was up about 4.7%, and ARKK added 3.6%. Nvidia, however, pulled back about 1% to close at $214 and change. So we are seeing some divergence within the big tech names, but overall risk appetite has not dissipated. Interestingly, the move in IBIT aligns with Bitcoin's 20% cumulative gain over the past 7 days. But we should note that the broader crypto rally is still marked as pending verification due to missing external data sources, so we are not treating that as a core theme today. The bottom line on U.S. equities is that we are looking at high-level consolidation, not a reversal. The next directional move really depends on the interplay between Treasury yields and the VIX. Now let's look at the global macro picture. The 10-year Treasury yield is at 4.74%, having edged up from 4.708 over the past 24 hours. This elevated yield level remains the single biggest constraint on growth stock valuations worldwide. If we see a decisive break and close above 4.8%, the risk-on narrative will clearly weaken. The VIX is at 15.13, down about 2.3% over the past day. That puts it at the lower end of the normal range, suggesting sentiment is stable, maybe even leaning slightly toward greed. The dollar index is at 98.8, essentially unchanged over the past week. That weak dollar platform remains intact, which creates a friendly external environment for emerging market assets and for the Chinese yuan. WTI crude is at $87 a barrel, up about 3.3% over 7 days. The firmness in oil points to supply-side disruptions and a renewed inflation trade, which will squeeze margins for midstream and downstream manufacturers. Spot gold is at $46.24 an ounce, up 1% on the week, holding in a high-level range with both safe haven and inflation hedging attributes in play. So how do we frame the global market right now? We characterize it as risk-on with a relatively strong bias. The evidence is a low VIX, a weak dollar, and U.S. equities holding at highs. But the 4.74% 10-year yield sets a clear ceiling. The conditions for this call to fail are simple. If the 10-year yield breaks above 4.8%, or if the VIX crosses above 18, either one of those would flip us to risk-off. Let's turn to the yuan and China's external environment. The onshore dollar-yuan rate is at 6.7205, and offshore is at 6.7201. The yuan remains in a strong range. With the dollar index flat over the week, there is no depreciation pressure on the yuan, and this currency environment is friendly for foreign investors looking to increase exposure to Chinese assets. A stable yuan directly lowers hedging costs for overseas capital. Add to that yesterday's A-share performance, where the Chi-Next index rose 1.43% and the Shenzhen component gained 0.87%, and there is simply no macro trigger for significant northbound outflows right now. On the trade and technology front, our search found no new verified events regarding tariffs or export controls between the US and China. For today's A-share open, we expect a flat to slightly higher start. The reasoning is straightforward. U.S. stocks closed flat overnight, the offshore yuan is stable, and Chi-Next led gains yesterday. The call would be invalidated if the offshore yuan weakens past 6.75, or if Nasdaq futures turn down more than 0.5% in pre-market trading. Now for the A-share market outlook today. The index direction is range-bound with an upward bias. The Shanghai Composite closed yesterday at 3905.2. Over the past 7 days, the low has been 3881 and the high 3990. We are currently in the lower middle of that range. The Chi Next closed at 3545.58, up 1.43% on the day, and that is the key strength indicator. Today we expect the Shanghai Index to trade in a firm manner within the 3880 to 3990 range. First we want to see it hold above 3900 and then challenge 3950. The call fails if the Shanghai Index breaks below 3880 on volume, or if northbound flows show net selling exceeding 3 billion yuan in the first 30 minutes. Let's talk about the leading sectors. First, the AI computing hardware chain, including optical modules, silicon photonics, and advanced packaging equipment. The logic here is that Chi Next's leadership yesterday confirms a return to growth-style investing. Our radar shows POET up 19.74% on the month with a catch-up progress of 69.3%. Names like COHR and AEHR are still in catch-up mode. AI computing is the strongest consensus direction for capital flows right now. Second, we have power equipment and data center power supply. The logic is that AI computing expansion drives electricity demand. This sector has been consistently active and aligns well with the Chi Next weight structure. Today we are not treating rare earth, quantum computing, or uranium as main themes. Names like IQMX, UEC, and USAR have moved more than 8% in 2 days, but external verification is incomplete, so we are not deriving opportunities from them at this time. Let's flag the risks. First, the 10-year Treasury yield at 4.74% is a real constraint. High valuation, long-duration growth stocks are sensitive to rates, so do not chase strength. Second, some names have already run a lot. AXTI is up 49.78% on the month, AEHR up 33.29%, and both have reached 100% catch-up progress with pending verification. We suggest taking profits rather than adding positions. Third, WTI crude is up 3.34% over 7 days. Cost-sensitive downstream manufacturers will feel margin pressure, so avoid that space today. On northbound flows, we lean toward net inflows being more likely. The basis is a weak dollar index at 98.8, a stable yuan at 6.72, and flat US futures pre-market. Watch the first 30 minutes after the open. If net outflows exceed 30 billion yuan or the offshore yuan breaks past 6.75, the call is invalidated. Now for the stock radar. Today's scan flags the market status as bull with a risk budget of 0.8. It also identifies TM, RGTI, and IQMX as unusual movers with gains over 8% in a short period, but all are marked pending verification due to incomplete external sources. On the opportunity side, USAR in rare earths is rated range-bound with an upward bias, 62% probability, with a window of 1 to 3 trading days. The trigger is continued momentum in the supply chain security theme and the stock holding above its recent platform. It fails if it breaks below the day's low or if market conditions weaken. Position discipline is to observe, not chase. USAR is up 12.57% over 2 days, which is a pending verification move, so do not use it as a basis for heavy positioning. On holdings, POET is rated relatively resilient with 58% probability over a 1 to 5 day window. The catch-up progress at 69.3% and the silicon photonics logic driven by AI computing expansion remain intact. The position call is to continue holding. It fails if it breaks below the 200-day moving average or if the catch-up thesis is disproven. AEHR has reached 100% catch-up progress. We suggest partial profit taking. If it breaks down on volume below recent support, exit completely. On the risk avoidance side, 5802.T carries a downside risk bias with 65% probability over 1 to 5 days. It is down 13.28% on the month, has zero catch-up progress, and has broken below the 200-day moving average. In a bull market environment, this persistent weakness is a red flag. It would be invalidated if it reclaims key moving averages on volume. Position discipline is to exit. HPS today follows the same logic, down 17.51% on the month, and we suggest exiting to rotate into stronger names. Let me wrap up with today's core call. The dollar is weak, the VIX is low, and the yuan is stable. The risk-on window continues. AI computing hardware and power equipment are the dual leadership themes. Our probability assessment for today is 35% up, 45% range-bound, and 20% down. That is all for this session. Thank you for watching, and we will see you next time.